Hello, everybody. I'm glad to be here at this summit. This is my third time at this conference, which has been running for 5 years, so it's always great to be back. I've got a presentation that's going to last about 30 minutes. And unlike prior presentations about Bitcoin and digital assets, I think more than half of this has to be a discussion about what's happening with global markets, inflation, the economy. And the reason for that is, for the first time really ever in the history of the life of Bitcoin and other digital assets, we've got a central bank that's fighting a war on inflation. That war is really questioning sound money. We don't really know what will happen in the US, but it's also having a big effect on how money is allocated. I think investors are really scared. So my presentation is titled, actually this is a Japanese word, kiki, which means crisis, but it's actually made of two different words. The first word is danger, and the second is opportunity. So I want to talk about why in a time of crisis we have both danger and opportunity. Okay, let's start with actually a quick advertisement. If you're interested in following our work, you can follow us on Twitter at Fundstrat or FS Insight. And this is the website to find out about a bit more about our company. Okay, but I do want to talk about the danger. All right, the biggest danger is inflation. Inflation is happening across the world. It's not something that we've experienced in our lifetime. You know, we have to go back to the 80s to find a time similar. But this is becoming a big question, because if inflation is going to be persisting and stuck around for some time, it's going to be very bad for financial markets, and unfortunately, I think it would be very bad for crypto. Secondly, we've got central banks. The Fed has been raising interest rates at the fastest rate ever in the history of monetary policy, as you can see here. They've raised interest rates in the US by 5 percentage points in less than 12 months. That is the equivalent of trying to give the economy a heart attack. And in fact, that's what's happened. Last year, the S&P 500 fell 27%. This chart I've marked because it's something really important to look at. Last year, the S&P 500 fell below its 200-day moving average. As you know, in crypto, that's incredibly important. Bitcoin is no touch. You can't own Bitcoin when it's below its 200-day. And every rally that we saw last year, there were 4 attempts. None of them lasted longer than 40 days, and markets quickly made new lows. So that's clearly a sign that monetary policy, the fear of inflation, was enough to keep investors very scared. And of course, we all know that central banks tighten until something breaks. This is a chart from Bank of America. And as they've marked here, every tightening cycle has led to something finally breaking. For instance, in the 2007-2008 period, we all remember this created the Great Financial Crisis. Well, in this cycle, something has already broken. It's the regional banks. And this chart is from the New York Times. But to give you an idea, this first part of that chart is 2008 and the total assets of all the banks that failed in 2008. Just this year, 3 banks have failed that have lost more assets than in the worst year of the Great Financial Crisis. So clearly, something is breaking here. But this is actually a moment for digital assets and blockchain, because each of these 3 banks failed because of the lack of transparency. Investors and depositors lost faith in these banks because, one, they didn't know how the banks were managing their, what they call, liability structure. And if we had blockchain or transparency into this process, we'd understand their risk, and I think these banks would have been fine. So again, it's a little bit of a learning moment for the financial industry. Now, there's a second part of the crisis, which is not only is the financial market facing a crisis, but in the US, crypto is facing a huge existential crisis. And that's because, as Chamath is pointing out, crypto in some ways is actually currently facing death in America. I don't think it's permanent, but right now there's a crisis. And the reason for that is Operation Choke Point 2.0. You may have heard of it. I'm not going to spend too much time, but there's a couple of white papers talking about this. But this is coordinated action by the SEC, the White House, OFAC, FDIC to discourage banks and financial entities from dealing with crypto. And for instance, I think it's pretty well understood that the collapse of Silicon Valley Bank, which happened earlier this year, might have actually been a consequence of Operation Choke Point 2.0. And my team put together a list of actions that have actually been tied to Operation Choke Point 2.0. And it starts here, this starts with FTX's collapse, but it includes actions against Binance, Paxos, Metropolitan Bank, Wells notices to many companies, including Coinbase. And we're already seeing the damage. I mean, since just planning my trip here, this week we learned that Jane Street and Jump are pulling back from crypto. Again, these are US regulated trading firms. You've probably seen it, but Binance's liquidity has been affected by this. And Bittrex looks like it's going to file for Chapter 11 bankruptcy. So again, a coordinated set of actions in America that are designed to really discourage the financial industry from doing anything related to crypto until regulations are more fully set. Okay, well, that's the crisis, and I just spent a few minutes talking about that. But let's look at the second part of the word crisis, which is opportunity. So again, whenever you're in a crisis, most people see the danger. Most people end up taking a step back, not getting involved. But of course, as you know, that's when you miss the opportunity. So let's take a look at Bitcoin. And how has Bitcoin survived every crisis? Well, the first crisis for Bitcoin occurred in 2011, because that's when Bitcoin went from $31 down to $2. And for anybody who was either hodling or was buying, well, you can buy Bitcoin at $2 then, and at the top of the next cycle it got to $1,300. And now you've seen each of the successive crises and opportunities. Well, I was here I first came here in 2018, and Bitcoin was in a bear market. So I don't know if any of you were at the conference at that time, but Bitcoin had been at 19,000, but in 2018 it was withering and falling and in the middle of a horrible bear market, and it fell to 3,000. Now, many people gave up on Bitcoin in 2018, 2019 because they lost money. Well, if they had hodled or invested, that 3,000 became 67,000 per Bitcoin by 2020, 2021. Okay, that's a huge opportunity. And as you can see, in the middle of this bear market, Bitcoin fell from 67,000 to 15,000. Now, for many reasons, and I'll explain here, I think Bitcoin's bottomed. But the question we have to ask is, where will Bitcoin recover to in the next cycle? Our digital asset forecasts are produced by Sean Farrell, and he does think that we're going to see ultimately in the ultimate upswing something approaching 250,000. And as you've heard numbers from Kathy Wood of around 500,000. I don't have a problem with those forecasts. But again, is there a roadmap to get crypto from 15,000 Bitcoin towards something in the hundreds of thousands? I got some charts here to explain why I think it's possible. But again, these are opportunities. It's not a guarantee. It's going to happen, but there's a lot of things that could go right that could make crypto quite valuable. And again, keep in mind, crypto is still just a tiny percentage of the financial universe today. It's still less than 2% of all investable assets. Okay, well, so far this year, 2023, it's been a good year for all things risky. Bitcoin is up 67% in dollar terms. The S&P 500 is up 7%. FANG, which I think is incredibly important to the crypto narrative, is up 35%. So to me, this is all signs that the opportunity side is emerging. And let's not forget, over the last 10 years, the single best performing asset class has been Bitcoin. As you can see, it's appreciated at 150% per year since inception. Okay, the next best performing is the NASDAQ, which is up 16% a year. Bitcoin has had 10 times the performance of the NASDAQ 100. So again, crypto has still proven itself to be a good asset to hold over the long term. Okay, but the first part of opportunity is that the stock market has to do well. Now, this is our rule number 3 from our rules of Bitcoin. But we first published this in 2018, which highlighted that Bitcoin only does well when the S&P 500 does well. So the best years for Bitcoin occur when the stock market is up. To give you an idea, take a look here. The x-axis is S&P. Whenever the S&Ps had negative returns, Bitcoin's done poorly. So in order for Bitcoin to have a good year, you need the S&P 500 to have a good year. And we can see this in the correlation. Bitcoin's highest correlation is to the NASDAQ 100, 92%. What does that tell you? If the NASDAQ's going to go up, Bitcoin's going to go up. And Bitcoin conversely has a negative correlation slightly to interest rates. So if interest rates fall, Bitcoin could do well. So again, it's a macro call this year. I would say that's probably 50% of the outcome of crypto is going to be what happens to the stock market. Okay, well, let's look at how the stock market's doing. This is the S&P 500. And the low mark there, 3491, is October. I have drawn a trend line, but a couple of important things are happening here. Number one, the S&P has managed to stay above its 200-day moving average. That's the dashed red line. That's good. And then the solid red line is the 200-week moving average. That's a very important line. That is the trend for the last essentially 5 years for the stock market. And the S&P has held above the 200-week moving average now for over 133 days. For 26 weeks now, actually, which is incredible. Why does that matter? Well, we've listed 6 things here. And when these 6 things have happened, you've never been in a bear market for the stock market. So if you believe these 6 things, which we've explained the rationale here, that we are in a brand new stock bull market. Well, if we're in a new stock bull market, we're in a new crypto bull market. But here's some of the charts. One of them is that the S&P 500 has been up for 2 quarters in a row. So 3 months, September to December 2022, and then the 3 months from January to March. You've never had 2 quarters of gains in the stock market while in a bear market. So again, this never happens in a bear market. Oops. The second is the 200-week moving average, which again I said is incredibly important. But whenever the S&P has stayed 15 weeks above the 200-week moving average, you've never made a new low. So again, a sign of a bottom. Okay, but let's talk about inflation. I think the best way to think of inflation, because everybody's worried about inflation in America, around the world actually, is to say how much has the price increased over time versus trend. So this red line is what price levels in America should be if you grow prices at 2% a year. And what I've done is I've shown you 1968 to 1982. That's the last time America had an inflation problem. And as you can see, Paul Volcker became chairman in 1979 when prices were 72% above trend. I mean, think about that. Prices had been going up for so long in America that the price level was nearly double where it should be. So whether it was a hamburger, eggs, home, whatever, it was almost 70% above where it should be. By the time he won inflation in 1982, okay, it took him 3 years. Price levels were 112% above trend. So it was a huge, huge job for Paul Volcker. Well, this blue line is where we are today. The price level in America relative to trend is about 7%. So you can see that it's a much smaller job for the Fed chair today. That's why we don't think Powell has to go as crazy in terms of monetary policy as Paul Volcker. Okay. I'm just going to skip a few slides here. But here's the thing. In the 1970s, the top chart is the S&P 500, and the bottom chart is inflation year over year. Now, do you see I marked a little red circle whenever inflation peaked in America? That's also when the stock market bottomed. So that's the thing. If you think inflation's growth rate in America has peaked, that's also why the S&P has bottomed. And this is why the Fed chair, I think, finally decided to pause last week. So Jay Powell, after the FOMC press conference, when they made their interest rate decision, said the Fed's going to pause and see what happens with interest rates. That's actually very good news for the stock market because it's reducing the risk that he's going to break something else. Well, when Paul Volcker sort of paused the inflation war, he waged the inflation war from 1979 and for 3 years fought inflation without stopping. But he finally paused in October 1982, okay? Just like Powell just did. But here's what's interesting. The stock market had bottomed 2 months before Paul Volcker decided to pause. So keep that in mind. The stock market will be ahead of the Federal Reserve. That's why the S&P probably bottomed in October. But more interestingly, once the Federal Reserve paused, the stock market went to an all-time high within 21 days. The recovery that you'll see in the stock market, if inflation is finally over, is going to be vertical. It's not a slow recovery. That's why you have to look at opportunity now. Okay, so where are we today on Bitcoin? This is from Sean Farrell, who's our head of digital asset strategy. He showed you the price cycles of crypto. The first one is the orange line, that's 2011. The red line is the 2015 cycle, which is when we got involved, and then the post-2018 cycle is the purple, and this is where we are today. So we're tracking other recoveries in crypto, and the question is this warranted, and then are there catalysts to get this higher? And I think yes. Okay, first, don't forget, this is our rule number 5, which is the rule of 10 best days. Again, it's the point of understanding opportunity. You can't necessarily time Bitcoin because if you don't own Bitcoin for the 10 best days in any single year, your average return is negative. Bitcoin makes almost all of its gains in just a handful of days. And before I sort of go into what I think are some of the opportunities, we have to keep in mind, I think crypto was pretty disappointing during the pandemic. I mean, of course, during the pandemic, Bitcoin did well, and there was NFTs and plenty of price and profits made. But that was a moment, okay, during the pandemic where crypto and blockchain and digital assets had a chance to be part of reshaping how we do our lives. As you know, remote work was the biggest change that had happened during the pandemic. People don't go to the office anymore. But crypto hasn't become more central to our lives. I think it was a big missed opportunity. And I spoke about this and we've written about this. Well, the biggest issue today is inflation. And I don't know if crypto is going to solve any of these problems, but we already know that inflation is spawning a huge wave of innovation around artificial intelligence and automation. In fact, as you know, in the venture world, 85%, maybe closer to 90% of all funding right now is going into generative AI and various forms of AI. These numbers, I think, understate it, but venture capital investment in AI was $400 million in 2018. It was $4.5 billion last year. I'm sure it's going to be more than double that this year. That is the single most important sort of trend happening globally. But is crypto central to this? So far, I don't see a lot of that yet. I see a lot of talk, but I haven't seen a lot happen. But there is something crypto is doing quite well, which is that actually NFTs are becoming a lot more mainstream. We know a lot of brands are actually exploring ways to connect with their customers with NFTs. I think that's actually a really good first step because, again, without digital assets and blockchain, you couldn't do something like this. You know, a centralized NFT really wouldn't work as well. And we know in Bitcoin, there is some innovation too. It's maybe colored coins 2.0. But these ordinals have actually shown that, again, a new way to use Satoshis, and it really ties back to the idea that NFTs are becoming a lot more mainstream. And there's some opportunity here probably because the Bitcoin miners, okay, and these are some of the 5 ones in the US, Marathon, Riot, Canaan, Hut 8, and Cypher. They haven't recovered or retraced as much of their bear market as Bitcoin has. And as we know, transaction volumes are starting to pick up on the miners. So again, opportunity. And we know that there's innovations in energy usage. I still think proof of work makes a lot of sense. I think that's what makes Bitcoin so unique and so secure. But we know there's a lot of criticism. And Ethereum was successfully able to execute its merge last year. And we know now that Bitcoin consumes a fraction of the energy of a lot of other large networks, which we've highlighted here. And again, this is actually a chart from A16Z. And there'll be other important uses of blockchain. You know, it's whatever it's, if you use zero knowledge proofs, but I wouldn't be surprised in the future if a lot of future legal documents end up in the form of NFTs. So again, opportunities, but future opportunities, because I don't think crypto has really taken advantage of what happened in the pandemic, and I'm not sure that crypto is really directing its efforts on fixing the problems of inflation, which it really could. And that's really what it comes down to, which is, let's say artificial intelligence is really using computing power for applied judgment. I think that crypto ultimately is using blockchains as applied money, you know, whether that again is NFTs or documents. And so, you know, I'm hoping more efforts are successful. You know, this is actually BitCarbon, which is trying to tokenize diamonds. But again, it's still early days. Future opportunity, if these were all successful, again, we'd see crypto become, you know, 10% of all investable assets. And that's it. So thank you very much.